Hello everyone, welcome to today's lecture. So today we are going to discuss two important topics. Okay, these are you can say an extension in case of the audit that you have already seen in the engagements and the standards. Okay, now what we are going to discuss today about basically we are going to discuss about internal audit and the group audits. Okay, internal audit and the group audit. So what we will do is we will start first with the group audit and then we will move to the internal audit. And why I say extension to the the audit that you have already seen to a statutory audit. See, the audit that you have already seen, already learned about statutory audit, okay, using or understanding the standards, application of standards. This is nothing different over here. In the case of group audit, it is nothing different than what you have learned. It's just the application which is there, which we need to understand. For example, how SA600, is applied practically. We will see that using the work of another auditor. And we will learn, through the questions and through discussions that, okay, what is the group audit and what are the, key things that we are required to take care when there are group audits. Okay. Now, as I said, we will take some questions on this topic. That means this is a revision lectures. Okay. Not a full-fledged lectures. That means that this is not a substitute of your reading the study material, practicing the questions, looking at the original, full-fledged lectures of LVC. These lectures are designed to, make you quickly revise the entire subject. So we will take up some questions, we will discuss on some key topics in order to, help you to revise the topic rather than discussing entirely in detail the entire chapter number 13 or, chapter on the internal audit. So this is not a substitute for the reading, for the practicing, okay, and for any of the LVC lectures which are there. Rather consider this as a complementary. So, before we proceed to the group audits, any doubt with respect to any of the part today? Or any of the previous things that we have discussed? Any doubt? No? Not an issue. If no doubts, let's proceed to the discussion. Okay. Now, we will start with the chapter group audits. And basically, we will understand through way of examples what is group audit, what are the responsibilities of the auditor, and all good stuff. Let me share a good question first. Okay, let me share a question and then we can basically discuss that question. Okay. So let me read the question first.
Alpha Limited, AL, is an Indian listed company engaged in manufacturing electrical equipment. AL has 3 subsidiaries. Beta Limited, BL, 80% holding, India. Gamma Pte. Limited, GL, 100% holding, Singapore. Delta LLP, DL, 60% interest in a LLP consolidated as a subsidiary. For the year ended 31st March 2026, AL is required to prepare consolidated financial statements, CFS, as per Ind AS. The statutory auditor of AL, CAX, is also appointed as auditor of BL and DL, but GL is audited by a local Singapore firm. During the audit planning meeting for CFS, the following points are noted. Management of AL has circulated a standard reporting package to all components, but GL has submitted only its local GAAP financial statements without giving details of related party transactions with AL and other group entities. The finance head of AL tells CAX, consolidation is purely an auditor's technical job. We will give you standalone financials of all entities and you can prepare the CFS and pass consolidation adjustments. Since GL is audited by a reputed local firm abroad, We need not review their working papers or obtain any specific information. We will simply pick their audited numbers. AAA has not documented any process to ensure that all subsidiaries, joint arrangements and other components are identified and included in CFS. Uniform accounting policies are applied across the group. Intra-group balances, transactions and unrealized profits are identified and eliminated.
Okay. So now in this scenario, if I talk about, so there is one company, Alpha Limited. Now, Alpha Limited has three subsidiaries. Beta, Gamma, and Delta. Okay. BL, GL, and DL. Now, what is happening is that for the 31st March 2026, AL is required to prepare CFS. AL is required to prepare CFS. Okay. And like there are some additional information with respect to the CFS which is given in the question. Number one, management of the AL has circulated standard reporting packages, okay, to all components. Then you can see that, the finance head of AL tells CAX is the statutory auditor of AL. It is also the statutory auditor of BL and DL, but not GL. It's a statutory auditor of AL, it's a statutory auditor of BL, DL, but GL is audited by the local, another firm. Okay, now what is the additional information? That consolidation is a purely auditor's technical job. We will give you the standalone financials. Since GL is audited by a reputed local firm abroad, we need not to review their working papers, obtain any specific information. We will simply pick their audited numbers. AL has not documented any process to ensure like all subsidiaries are included in CFS, uniform accounting policies are applied in the group, intra-group balances are identified and eliminated. Now, you need to provide the responsibilities of the parent, that is AL. Okay, you need to discuss the responsibilities of the parent with respect to the consolidated financial statements. So take a minute, read the question again, and then tell me. A lot of things are already there in the question itself. The things we need to answer, and it's a pretty easy question. Tell me, what do you think about the responsibilities of the parent with respect to the consolidated financial statement? Yes. Anyone? What do you think? What are the responsibilities? Anyone?
So, management of parent company is responsible for identifying all the components which needs to be consolidated and obtain financial and sufficient information for the consolidation purpose.
Okay.
Moreover, if there are any reporting segments also, management should identify and moreover, management is responsible for making all the consolidated adjustments.
Mm-hmm.
And in case of related party transactions also, it should disclose the related party transactions.
Okay.
And it should eliminate the intra-group adjustments. And Gamma Limited, since it is a Singapore company following accounting policies which are different than the consolidated financial statements, management should take appropriate steps to convert the financials into the gaps which are followed for CFS and make appropriate adjustments for that also.
Okay. Very good. Anyone else with anything further to add? Anyone? No? So what do you think are the responsibilities of the parent? Like few are discussed already. Anyone else with something more to add on this? No? Okay, let me
Sir,
Yes.
1 minute. Sir, in this case of management of AL Limited has circulated the standard reporting package to all the component, but GL has submitted only the local gate, which means for the financial statement, which giving the details of related party transaction with a, which means whatever they have provided, it has been prepared as per the local gap of the financial statement. So it is the management of the listed company AL Limited has to has to ensure that in line with the Indian gap.
Okay.
First, they have to align with that. Since related party transaction, they disclosed as per that that country, it has to be converted into the Indian gap and it has to be updated accordingly.
Okay. Very good. Yes. Absolutely correct. See, absolutely correct. Your answers are right. So, when we are talking about responsibility of the parent, the first responsibility comes is that identification of all the components. Like the parent has to identify all the subsidiaries, joint arrangement, other components that are required to be included in the CFS. Okay. Second is identifiable or identifying reportable segments. Okay. Component is one thing, but segment reporting is also required to be done in CFS. And for that, they need to identify segments which are there. Third, identifying all the related party transactions. Because now, once you have subsidiaries, joint arrangement, all those things, components coming into the picture, you have a bigger bucket of the related party. The bigger bucket of the related party will give you the bigger bucket of related party transaction. You need to identify that. Okay. So related party transaction. Then you need to identify and obtain accurate and complete financial information from components. So it's not something that you need to just rely upon whatever numbers are given. You need to see it is complete, it is accurate, it is the thing that you were looking for, the numbers and the information you were looking for. It's the complete financial information from the components. Okay, that you need to obtain. Then you need to make appropriate consolidation adjustment. Now see, consolidation adjustments, intra-group balances are there, unrealized profits are there. So these are required to be eliminated. So you need to make those adjustments. Then harmonization of the accounting policies. Now here, Gamma is, incorporated outside India. They might be following some different set of accounting policies. So you need to convert that, harmonize those accounting policies with the accounting policies which are being followed by the Indian entity. And the last one is the gap conversion wherever required. Let's say, for example, if it is following Singapore gap, okay, or Singapore financial reporting standards. In that case, you need to convert it to the Ind AS. So that conversion is required, and then only you need to use that number. You cannot simply pick their audited numbers. No, that is not something appropriate. So these are the responsibilities of the parent in the current scenario. So if you want to see the answer, page number 13.8 of your study material.
Sir, and also with respect to point number 2, it is clearly said that it is a duty of the auditor to do the consolidation. The consolidation also, it is a duty of the management. They have to consolidate everything. Then only it has to be passed to the auditors. But that statement also is not correct.
Correct. Absolutely. So the responsibility of preparation and the presentation of the consolidated financial statement, and among other things, is that of management of the parent, not of the auditor. So it's not the auditor's responsibility. Okay. And the points that we discussed, the responsibility of the parents is identifying components, identifying reportable segments, related parties, obtaining accurate complete financial information, making appropriate consolidation adjustments, harmonization of accounting policies, and gap conversion. Clear? Any doubt? Any doubt? Okay. If no doubt, then anyone can quickly, can anyone tell me quickly, under which section of the Companies Act a company is required to prepare consolidated financial statements? Where the requirement lies under the Companies Act for the preparation of the consolidated financial statements? Anyone?
129.
Sorry?
129 section.
129. Okay.
129.3.
129.3. Okay. Yes, absolutely correct. 129.3. Now, what 129.3 says? Okay. 129.3 says where a company has one or more subsidiaries, in addition to the financial statement, they are required to prepare a consolidated financial statement of the company, of all the subsidiaries in the same form and the manner which is applicable to that particular company. Okay. And there are exemptions in that particular scenario. So it's not necessary that each and every company is required to prepare. There are exemptions. The companies to whom, the exemption is given, there are some companies based on the criteria who are not required to prepare consolidated financial statements. And we have to see those exemptions also and those, criteria under which they are not required to prepare. Okay. Now let us take one more question. Okay. I'll quickly provide you the details about the questions. So the question is that there is a company called X Limited, unlisted company incorporated in India. It prepares financial statement as per Ind AS and has the following structure as of 31st March 26. X Limited holds 100% of the equity shares of Y Limited, Indian company. X Limited holds 70% of the equity share of the Z Limited, another Indian company. X Limited itself is a 100% subsidiary of PSA, a company incorporated outside India. Additional information: the debt and instrument of X Limited are not traded in any public market, and the company is not in process of issuing such instruments in public market. PSA prepares consolidated financial statement that includes X, Y, and Z in accordance with an acceptable financial reporting framework. These consolidated financial statements are available for the public use in the home jurisdiction. All the owners of X Limited, including those not otherwise entitled to vote, have been informed in writing that the XPVT Limited does not intend to present consolidated financial statement, and none of them has raised any objection. Management of X has proposed to prepare only standalone financial statements and not to prepare CFS, contending that it is exempt from doing so. Examine whether XPVT can be exempted from preparing CFS in terms of the applicable financial reporting framework. Now, read the question, take a minute, and then tell me what do you think, whether X Limited can enjoy the exemption or not. Okay, tell me, do you think here the X Limited can be exempted? Yes, no?
Yes, sir, it is applicable, sir. Since it has that Indian subsidiary company, hence it is applicable. If there is no Indian subsidiary company, then it is not applicable in the hands of X Private Limited.
So you are saying the exemption is available?
No. Exemption is not available. The reason is that even though the X Private Limited is a 100% subsidiary of the PSA incorporated outside India, only if X Private Limited is alone the subsidiary of the foreign company, then this exemption it is available. CFS is not needed. But whereas in this case, X Private Limited hold 100% of that equity share of Y Private Limited, Indian company, and Z Limited, another Indian company. So, considering this point, that X Private Limited has to prepare the CFS.
Okay. So if PSA prepares the consolidate and all the conditions satisfied, they cannot enjoy the exemption. X Limited cannot enjoy the exemption. Holding company. Now they are ready to prepare the CFS in accordance with the expected.
But PSA is incorporated outside India, no, sir. If it is in India and if those financial statements are of public use in India, then the exemption will be applicable. But here, as it is a foreign subsidiary, X Limited needs to prepare consolidated financial statements.
Okay. Now tell me one thing. This is one of the criteria that is you are telling, you are providing that. Now, what Indias will be applicable in this particular scenario? Can anyone tell me?
India 110.
India 110. Okay. Whether the company is exempt under India 110 or not.
Not exempted.
Not exempt under India 110.
Yes, sir.
Okay. And any specific rule that you will apply to this particular company, that the company should, under which they are required to prepare the, you can say, financial statements, consolidated financial statements?
So there are two conditions are actually there, two clauses are there. But when the holding uppermost company is preparing a CFS and the intermediate company is not required to prepare, when the objection is received from the all the downside stakeholders, shareholders. That is one clause is there. Another clause is that when there is an investment company, for them also it's not required to prepare the CFS. It's optional for investment company. Yeah.
Okay. Okay. So let me discuss the answer with you. Okay. Now see, under Companies Act, there are exemptions given. Okay. With respect to the companies who are not required to prepare CFS. And we will discuss those exemptions now, and then we will also go to the Indias, because Indias also, presents some requirement with respect to exemptions and, requirements with respect to the entities who are not required to prepare CFS. Okay. Now, first, let's discuss the Companies Act. So there is a Rule 6 of Companies Accounts Rule. Okay. Rule 6 of Companies Accounts Rule, which basically talks about, the manner of the consolidation of accounts. Now, what it says basically, it says that there are certain conditions. Okay. If those are satisfied, okay, then the preparation is not required. The preparation of the consolidated financial statement will not be required. So one is provided further that nothing in this rule shall apply in respect of preparation of the consolidated financial statement by a company if it meets following conditions. Okay. What are those conditions? These are the three conditions. If the company meets these three conditions, they are not required to prepare consolidation. So the rule will not be applicable. Okay. What is the thing? First, a wholly owned subsidiary, partially owned subsidiary, another company, and other its members, including otherwise not entitled to vote, have been intimated in writing and for which the proof of delivery of such intimation is available, and they do not object to the company for not presenting consolidated financial statements. It is a company whose securities are not listed or are not in process of listing on any stock exchange in India or outside India. Its ultimate or intermediate holding company files consolidated statement with the registrar and are in compliance with the applicable accounting standards. Now, this is very important point. First of the thing is that they are filing with registrar and are in compliance with applicable accounting standard. First thing. This is the first exemption, which is given under Rule 6. Now, if this exemption is satisfied, that means the company can be exempted from preparing the consolidated financial statement. In our scenario, if you see, the PSA Limited prepares the financial statement with an acceptable financial reporting framework, which is acceptable over there. Not applicable accounting standard, acceptable and applicable. Applicable to X Limited. Both are different. So it's not the case. Then they are available for the public use in the home jurisdiction over there. They are not being filing with the registrar. So these conditions are not satisfying, specifically this one. This condition is not getting satisfied. So this exemption under Rule 6 is not available. Not available. However, there is one more scenario, one more thing that is required to be considered. Okay. That is this particular exemption. If you see what it says, provided that in case of a company covered under subsection 3 of 129, which is not required to prepare as per the financial statement under the accounting standards, it shall be sufficient if the company complies with the provision on consolidated financial statement provided in Schedule 3. So, if there is company which is exempted under the accounting standards, who are not required to prepare consolidated financial statement, in that case, only comply with the provisions on the consolidated FS as per Schedule 3. It shall be sufficient for that company. Now, for that, when I talk about accounting standard, in this case, we need to see Ind AS 110. That's very important. Because if this exemption is given to Ind AS, then in that case, we need to see that, it is being, the Ind AS exemption is applicable or not. Okay. So, let's see the Ind AS 110. Now, this is Ind AS 110. Now, we will go to the particular part. Okay. A parent need not to present consolidated financial statement if meets the following conditions. One, wholly owned subsidiary not entitled to vote, who like votes and they do not object. So do not object. One, that equity not vested anywhere. Second condition, not in process of filing for the listing. Third condition, like over there we have one combined in the act or in the rules. Here it is bifurcated and more detailed one. Fourth, its ultimate or intermediate produce financial statement that are available for the public use and comply with the Ind AS, in which subsidiaries are consolidated or are measured at the fair value through profit and loss account in accordance with the Ind AS. Now, if that is done, this part is done, then we can say that yes, exemption can be granted, because here the requirement of filing with the registrar is not present. But the only requirement here is that they should be available for the public use and they should comply with the Ind AS. Now, again, in our question, they were not complying with the Ind AS. They were complying with the applicable financial reporting framework, which was in their home. acceptable financial reporting framework over there, not Ind AS. As a result, again, the exemption cannot be granted. Clear? Clear to this? Any doubt?
Clear, sir.
Yes.
Okay. So till the time they do not comply with the Ind AS, the financial statements are not available in the Ind AS. Simply, we cannot grant an exemption. Now see, again, nowhere the requirement is that the parent or intermediate holding should, be Indian entity. It can be, entity outside India. But if you want to get an exemption under Companies Act, they have to file with the registrar. If you want to get an exemption under the Ind AS, you have to prepare the financial statement in Ind AS, considering the all of the entities which are there, all of the subsidiaries. Okay. Now,
Sir,
hmm,
sir, in this question, if PSA prepares financial statements as per Indian GAAP, then this exemption can be claimed, right, sir?
but that should be available in the like over here, because if you see, it says that available for the public use and comply with the Ind AS, not only in the home jurisdiction. It should be available for the public here also in India.
Okay. That means compulsorily it needs to be registered. I mean, those should be filed with the registrar.
Kind of, but see, again, now, as of now, this particular point available for the public use, it's a gray area. Like, what it means, there is no litigation, that much litigation on those areas, or there is no specific, detail on that. But we will assume that it is required to be filed with the registrar. Otherwise, you cannot have for anything for the public use. It's not verified, means.
That means in question, if there is like these are prepared as per Ind AS, also by default for the exam purpose, we can write it as exempted.
Yes, you can say that it is available for the public use, because the question gives are Ind AS, Ind AS 10 and Ind AS 110 provides the exemption, and fine.
Okay.
Any doubt? Any doubt till now?
Sir,
No. Okay. If no doubts, then let's proceed further. Okay. I will take one more question on similar lines. Okay. Because we want to build our understanding on this particular part. Anyone? Yes? Anyone saying anything? Okay. So, let me go to that particular question. Yes. Very good question. What this question is, R Limited is an Indian company whose equity shares are listed on a recognized stock exchange in India. Its financial statements are prepared in accordance with the Ind AS, and the following information is given. R Limited holds 100% of the equity share of S Limited, an unlisted company in India. R Limited holds 75% of the equity of the TFZE, a company incorporated in the foreign jurisdiction. R Limited itself is a wholly owned subsidiary of H Global BV, a company incorporated outside India. H Global BV prepares CFS for the wider group in the compliance with the financial reporting framework generally acceptable in the country of the incorporation. Those CFS are made available to the public. Management of the R Limited argues that since we are wholly owned subsidiary and our foreign parent already prepares the CFS, we need not to prepare CFS in India. The TFZE is outside India, so it is not necessary to include in any consolidated financial statement which we may prepare. As the auditor of R Limited, you are required to analyze whether the R Limited is required to prepare consolidated FS, comment on the contention of management that TFZE is a foreign company and need not to be consolidated. So, two things that you need to report about. Yes. Take a minute, read the question and then tell me what do you think. Quickly. Okay, tell me now, what do you think?
Sir, R Limited needs to prepare consolidated financial statements.
Why?
Even though it satisfies the condition of wholly owned subsidiary, but the ultimate parent, that is H Global Limited, is not preparing financial statements as per Ind AS.
Okay. Good, very good. Anyone else would like to add to this? Anyone?
Sir, and also while preparing the R Limited, the CFS, the TFZE company which is incorporated outside India, foreign country, in that also as per the Indian GAAP, it has to be converted and accordingly it has to align and it has to be prepared or reported.
Okay. So any other, like first, we will discuss first the R Limited. R Limited closed, they are required to prepare because H Global BV is a company incorporated outside India and it is not preparing financial statement in compliance with NDS. So that is final.
Yes, sir.
What are the intention of the management is not correct. It has to prepare the CFS.
See, okay. What are the three conditions?
Wholly owned subsidiary. If it is partly owned subsidiary, no objection from the remaining shareholders. A company is not listed or it is not in the process of listing. If the ultimate or intermediate holding prepares consolidated financial statements as per Ind AS and are available for public use.
Here the
Okay.
main is that the R Limited is a listed company. That's the problem.
Yes, that's a listed entity. It's not about being that H Global BV is incorporated outside India. Remember one thing, the condition are required to be satisfied in a list order. If the first condition itself it is not satisfying, don't go to the third one. It's a listed on a recognized stock exchange. Matter over, they have to prepare. I will not see whether outside India, inside India, the first condition, the second condition itself is not getting satisfied. It is listed. They are required to prepare CFS. And the second part, TFZE. Now let's come to the second question. What do you think of the second question? The
For second
contention.
question, yeah. Sir, the second question, the management is arguing that since TFZ Limited is outside India, so it is not necessary to include it in the consolidated financial statement, which may be prepared. But the intention is not correct. Once that R Limited is applicable to the prepare the CFS, whether it is a foreign company or elsewhere, it has to prepare as per the Indian GAAP. If they are preparing at that foreign GAAP, then it has to be converted to the harmonization, accounting policy, everything to be done. It is not exempted.
Okay. Anyone else with like, tell me one thing where it is written that, all the subsidiaries are required to be included, even which are outside India. Where it is written?
Sir, since it is a subsidiary company of R Limited, that itself is qualified to prepare that CFS. Whether it is in India or outside India, it's not a matter.
But is there anywhere written that all the subsidiaries are required to be taken? Like I can, take, like I can say I need to take only Indian subsidiaries. Why I'm taking outside one also?
Sir, if you look at the section 129(3), it's talk about the consolidation to be done for all the JVs, subsidiaries, and associate.
Correct. So, see now again, when we talk about the section 129(3), it does not restrict. It says, as you mentioned, it says all the subsidiaries. 129(3) talks about all subsidiaries. Okay, if it has one or more subsidiaries, then all the subsidiaries are required to be considered over. When you have one or more subsidiaries, then you are required to prepare for all the subsidiaries. Even if you see Ind AS, it does not bifurcate local subsidiary, international one, locally, incorporated. No. So when we say all, it includes all. Okay, that is given in section 129(3). Talks about all. So as a result, in that particular scenario, we are required to prepare. Even if you see Ind AS 1110, over there, you have the definitions. When you see the definition of a subsidiary, that an entity that is controlled by another entity, it does not, say that whether incorporated in India, outside India. No, we are talking about the subsidiary based on the control. So whether it's a subsidiary or not, it is defined on the base of the control, not where it is incorporated. That's why all will come. Okay, so the comment on the contention of the management that TFZD being a foreign company need not to be consolidated, incorrect. It has to be. Clear? Any doubt? Any doubt? No? Okay. Now let me change a bit and then you tell me. What I'm changing is I'm changing a few things in this particular question. Would your answer change if R Limited is a R private limited? That is not a listed entity, and its business is to invest the money of investors, bracket में shareholders, in order to earn interest and capital gain on investment. Now tell me, would your answer change? Yes, no?
No, sir. Still, it needs to prepare consolidated financial statements.
Whether parents consolidation, the H global, will I still apply over here? Like, they are not preparing in India. They are not preparing as per the, Ind AS. that is applicable. So H Global BV is still preparing as per their framework, which is available over in home jurisdiction, not here.
No, sir. I think it's not needed. Only to the two level of investment companies, still exemption is there. In section 1, Ind AS 110 also is talk about that.
So for
Para number 4B.
investment company to claim the exemption, the parent company also needs to be investment company.
Okay.
And
Now, see, the point here is a parent, like when I see in this particular case, okay, in this particular case, we need to understand what is the requirement with respect to the investment entity, whether investment entities are required to prepare or not. Okay. So a parent entity that is an investment entity is not required to present consolidated FS. Okay. In accordance with the NTS. If it measures all its subsidiaries at fair value through profit and loss account. Now, if there is a parent that is an investment entity that is exempt from preparing CFS. Now, how to determine whether a parent is an investment entity? Obtaining funds from one or more investment for the purpose of investment, commits its investment to the business of investing funds only for returns from capital appreciation and investment income, and measures and evaluate the performance of substantial of its investment on a fair value basis. Okay. So if these conditions are satisfied, then in that case, okay, it will be classified as an investment entity. Now that is the one condition. Okay. And if I say that's an investment entity, then they are exempt. Okay. Now, now, an investment entity is not required to consolidate its subsidiaries or apply Ind AS 103 when it's obtained controls of another entity. That is there. That is given in the Ind AS 110. Okay, an exemption is given because they are allowed to measure subsidiaries at the fair value through profit and loss account. The point comes is, what if in this particular scenario the H Global BV is also not prepared? Okay. Now, if H Global BV is also not preparing, will it have any impact in the current scenario? Tell me. If I say India provides exemption to the investment entity, this classifies as an investment entity. But H Global is also not, filing in India. Will that make a difference?
No, sir, there is no impact on that when it is a foreign company. So, our section 129(3) talks about the only Indian company. It's not about the foreign company. When the Indian company is applicable to prepare the CFS, it has to be prepared, even though whether the subsidiary is belonging to India or the outside India. But when the Indian company itself is not exempted from the CFS, then the holding company will not worry about whether it is a foreign, whether they are preparing or not preparing, since it is not applicable to India.
Okay. Now let's go back and understand Rule 6 for that. What Rule 6 says that? Provided in the case of a company covered under subsection 3 of 129. That means company who has a subsidiary, one or more subsidiary. Now 129(3) what talks about where a company has one or more subsidiary. And they are required, in addition to the financial statement that they are required to prepare, they are required to prepare a consolidated financial statement of the company. And all the subsidiaries in the same form, okay, to be laid before. Now, which is not required to prepare CFS under the accounting standards. Now, talking about a company having subsidiary, which is not required to prepare the CFS under AS or Ind AS in this particular scenario, it shall be sufficient if the company complies with the provision of CFS provided in Schedule 3. I'm not going to these conditions now. I'm not going to these conditions. I am getting exemption under Ind AS by way of this investment entity is defined in Ind AS 110. It's not defined under Companies Act. It's not part of Companies Act. That exemption is there under Ind AS 110. That means if I am falling under this, I will not go into the subsequent exemption. I will not check for the subsequent exemption about whether it is being filed with the registrar or compliance with the applicable accounting standard. No, I am investment entity. I am being given an exemption under Ind AS 110. So what I need to do now is I need to only comply with the Schedule 3 with respect to the provisions on consolidated financial statement. That's it. It's not now my problem what the ultimate parent does, and it is not required to be looked into in this particular example also. Okay, so if I talk about this example, point number C, like that we are discussing, what H Global BV does doesn't make any sense or doesn't matter even. Okay, because the moment I say R Private Limited, not a listed entity, okay, not in process of listing, is an investment entity, R Private Limited is not required to prepare CFS. Simple. Clear? Any doubt?
So then we will not check Companies Act if it is getting exemption under Ind AS 110, sir?
Once we are getting the exemption under Ind AS 110, that's over. Why would you go and take another exemption? So one exemption, like if I talk about the rule of priority, the first exemption is given under Ind AS. Then the subsequent exemption is given under the Companies Act. That means if you are not able to comply with the exemption which is there in the Ind AS, still some exemption is given under the Companies Act and Rule 6. So I may check for that. But if I'm getting an exemption already under Ind AS 110, why to check for another exemption?
Yes, sir. Thank you.
Clear?
Yes, sir.
Yes, sir. Fine, sir. Section 133 only is given the power for Ind AS.
Yes. Any doubt? Any doubt? Okay. If no doubts, then let me take up one more question on this particular topic itself. Very good question. Okay. So,
Sir,
yes.
sir, in study material page number 13.7, can you explain that paragraph, sir, about the investment entity?
13.7. Just a minute.
Yes, sir. So for investment entity to claim the exemption, actually parent and subsidiary both needs to be investment companies, no, sir?
No, not necessary. See, which paragraph you're talking about over here on page number?
13.7. 13.7.
Yes, tell me. This paragraph you're talking about?
Yes, sir. Paragraph 33 of Ind AS 110, parent of an investment entity shall consolidate all entities
That it
unless
controls.
the
Now,
parent...
parent of investment, I'm talking about, see, in our example, our private limited was investment entity. Okay, the parent of investment entity, that is H Global BV. Let's say if it was not H Global BV, another Indian entity, then that Indian entity was required to consolidate all entities. This investment entity also, including those controlled through an investment entity. This means if R Limited controls S Private Limited, T Private Limited, so all those entities, unless that parent itself is an investment entity. That means if this is also investment entity, then it will also enjoy exemption. Okay.
Okay, sir.
So it talks about the parent of the investment entity, the parent of the R Private Limited or R Limited in our question.
Okay.
Any other doubt?
clear.
Okay. Let us take one more question. Very good question, I would say. P Limited is an Indian listed company which is a parent of a diversified group operation operating in manufacturing, retail, and overseas distribution. The group structure on 31st March 26 is M Limited 100% subsidiary in India, R Limited 80% subsidiary in India, okay, FBV 65% subsidiary incorporated in Europe, okay, whose financial statements are prepared under local GAAP, IFRS, as of now. A Limited 30% investment in India, over which P Limited has a significant influence accounted for using equity method. Okay. Now the separate financial statements of PMRF and A Limited have been audited by their respective auditors. That means they have these separate auditors. Management has prepared consolidated financial statement for the first time for year ended 31st March 26 using a complex consolidation workbook. You are the engagement partner responsible for the audit of consolidated financial statement of P Limited. Explain the auditor's responsibility in relation to the auditing the consolidation process and consolidation adjustment in the given scenario with respect to the fact that the separate financial statements of the parent and components have already been audited, the presence of both domestic and foreign subsidiaries, the inclusion of an associate accounted for using the equity method. So we will first focus on the A point. Now you need to tell me the auditor's responsibility in relation to auditing to the consolidated process and consolidated adjustment in this given scenario. Quickly. Now tell me what is the responsibility, auditor's responsibility in given scenario. Come
Sir, I think since it has to be an auditor for the different auditor, the CFS auditor, the parent auditor has to report under CARO as well, class 21.
Mm-hmm.
They would state that these are the component audit by the different auditors.
Mm-hmm. Anything else?
And also the management is responsible to prepare the consolidated statement for all the entities.
Okay.
And hand over to the parent auditor.
Okay. What else?
And that foreign entity, under the local GAAP, it has to be converted as the Indian GAAP, and accordingly, it has to be consolidated.
Okay, very good.
And the harmonization of accounting policies, if any, between them.
Mm-hmm. Very good, yes. Anything else?
But in case of subsidiary, the line by line addition will be there in the CFS, but associate, we will not do the line by line addition in the CFS, since it is done under the equity method.
Okay. So in case of equity matters, how will you do that? If you will not do line by line, then what you will do?
We will report on the investment at the fair value, sir.
Okay. Understood. What else is the responsibility of the auditor over here?
But again, the auditor responsibility, he has to fix the overall materiality and he has to be distributed to across them while they are doing the audit, as well as they have to check the independence of the each auditors, whether they are independent and confidence check also has to be confirmed along with the integrity.
Okay. Okay. See, now when I talk about this particular question, okay, how you need to write the answer for this? What do you need to write in the answer for this particular question? That is very important. We need to understand the auditor's responsibility with respect to, auditing the, like, in this particular scenario, specific things, audit considerations. Okay. Or you can say we are auditing the consolidation. We need to understand how to audit the consolidation. Okay. Now, what is the first thing given? That fact that the separate financial statement of the parent and component have already been audited. Now, what is the auditor's responsibility in that? If there are separate financial statements which are already audited, so we need to write the answer with respect to SA 600 using the work of another auditor. Okay. If everyone can come on page number 13.13. Okay. So what do you need to do with respect to, basically, sorry, not 13.13. Oh, just one minute.
So the problem with this question is that the work has already been performed. If it is continuing work, then he could have coordinated with the auditor and then prepared a time schedule, or given the list of materiality discussions with the items which were material, which may have the impact on the consolidated FS and the related party transactions which were identified by the if
Yes.
if if it was an ongoing process, but here it has already been performed. So then
No. So already been audited, but you are still auditing the component. Oh, sorry, you are still doing the audit of consolidation. That means the parent audit is still not closed. Okay. Now, in that case, what is happening is that even though the component audit is closed, still you need to follow SA 600, which is your responsibility. Okay. So what is the responsibility of the parent auditor? The parent auditor's responsibility is provided under SA 600 using the work of another auditor. That means in the carrying out the audit, what you need to do is, first of all, you need to compute the materiality of the group as a whole. Even though after their audit is done, I will still do it. Okay, I will use that materiality to see the consolidation adjustments, if there are any. If the adjustments which are passed by the management, whether they are material or not material. I need to compare the materiality, compute the materiality on a group level. Okay. Once I define at the group level, then I need to allocate that materiality on the component level. Now you are saying the audit is already done. Then what is the point of allocating component materiality? To check which component is material. To determine what is the material component for me. Now in this case, the audit is done. But that does not stop me from asking additional information from those auditors. Audit is done. Fine. If there is some additional information that I need, I can still ask, I can still go out and reach out to the component auditor. That component auditor, please provide me this particular additional information. So communication I can still do, even though audit is closed. It's not necessary that if the audit is closed, you cannot do the communication. Okay. I can obtain certain confirmations from component auditors, which they might have already, adhered to, like independence and code of ethics. It's not again the case scenario where the audit is closed and they cannot provide the confirmation. No, these responsibilities will remain there if even the audit of component is closed.
Yes, sir. I think this is what I discussed. I think And also that parent auditor, as per 706, the other emphasis matter paragraph, other matter paragraph. In the other matter paragraph, he can very well inform as per
Yes,
SA 600. These are the component were audited by the so and so person.
correct. Yes, yes. The second
So
question was, yeah,
it will
yes,
it will come in 706 or 705. EOM or
706 other matter paragraph.
Yeah,
not
706
in
only.
emphasis or matter paragraph, sir?
No, no.
That is also 706. 705 is your qualifications.
Yes, sir. But it will come in OM para, not in EOM para.
No, OM para. Remember, even if you see SA 600, it says specify. Why OM para? There are two reasons. Number one, SA 600 itself is. Number two, when you used OM para. When you use OM para.
So when it is not part of the it is not part of the financial statements.
But it is relevant to the auditor's responsibility, audit report, okay, or auditor's, you can say, performance of the work or whatever area. It is related to audit. If it is related to audit, auditor's responsibility, audit report, I will use OM paragraph. Now here, when I'm relying upon the work performed by another auditor, it is with respect to the auditor's responsibility and audit. That's why I use OM paragraph. EOM paragraph, it's about the matters which are already specified in the financial statements. You want to bring, attention of the users on that. In financial statement, why they will write upon the audit which is being performed by the auditor. That's why not EOM paragraph.
Yes, the EOM paragraph is specifically when only the user adding information to it. It has to be agreed with that those charged with the governance as well.
Yeah.
Otherwise, it should not be reported here. Any qualification will not form part of EOM paragraph.
Well, yeah, EOM and OM paragraph are for other reportings. Okay.
Yes.
Now, the second part of the question was, let me go back to the question.
So can we use an expert for some understanding in this matter? If although it specifically says that will not use him for accounting understanding, 620, but can we use him in this connection, sir? In case of
See,
international accounting.
now again, when we are saying using the work of an expert, okay, understand one thing specifically why they have excluded the the areas of accounting and areas of audit related thing. If you read essay basically which is there, now what it talks about responsibility of the auditor. Okay, it talks about that what auditor can do when they rely on the work of an expert. So SA 620 basically says that, okay, if you want to rely upon the work of the expert, you can do these things, do some additional tests, verify this, and then you can rely upon the work of expert other than the accounting and auditing. Why? Because those are technical areas and practically you cannot perform entire audit by your own. Let's say, for example, any engineering related thing. You cannot verify by your own. So what you need to do is you need to call the expert, but limited test you will perform on the qualification and everything of the expert because you cannot understand the technical things of the engineer. Now, when it is the audit and accounting, that means you can understand everything. Being a chartered accountant, you can understand everything. At that point in time, you cannot go and say that I have performed my limited test. I have verified the qualification, competency, and all those things of this expert. I could not perform anything further. That's why it's not my responsibility. No, you cannot say that. That's why it excludes the accounting and auditing part. Over there, if you even appoint the expert, you cannot call that particular as an expert. You can have an expert. That is perfectly fine. But you cannot call that person as an expert because at the end, from start to end, you are fully responsible. Even if you do the testing, if you do the steps which are given in SA 620 with respect to that expert's competency, skill, all those things that we have, still you will be responsible.
Correct, sir. Thank you.
Any doubt? Okay. If no doubts, let's go to the question number B. The presence of both foreign and domestic subsidiaries. So explain the auditor's responsibility when you have the domestic and foreign subsidiaries for the consolidation. What is the responsibility of the auditor? Pretty straightforward. Trust me. When you have the foreign and domestic subsidiaries both, come on, quickly. What would be the auditor's responsibility at that point in time? Anyone? No?
Foreign subsidiary is preparing financial statements as per the local gaps, and management is making conversions to align with the CFS gap. Then auditor has to check the translation adjustments made by the management and report further accuracy. If the foreign subsidiary is following the accounting policies like group policy, which is mentioned by the parent entity, and it is preparing financial statements as per the group policy, then auditor can check the policy for the compliance with the gap which is required by CFS. He need not check. Yeah, he need not check the financial statements once again.
Yes, very good. Absolutely correct. See, if there is a foreign subsidiary, as an auditor's role, what we are required to do is, in case of a foreign component, okay, you need to verify the adjustment to convert a component's audited financial statement prepared in the local gap to the gap under which the consolidated are prepared. Now, these adjustments are not batched by the auditor. Understand one thing. These adjustments are already performed by the management. You need to audit these adjustments. Okay. So if there is a different accounting policy, you need to see the adjustment relating to the harmonization of the different accounting policies. If there is a foreign component, adjustment to convert a component's audited financial statement to the Ind AS or whatever, the financial reporting framework is being followed. So you need to audit those adjustments. Okay, you need to see that adjustment which are made, okay, you like are appropriate or not. So you need to verify the calculations, you need to look into the accounting policies, you need to see whether the conversion is made appropriate or not. Then only you can say that, okay, it is fine, otherwise it's not. So as an auditor, it's your responsibility to audit these adjustments. Now, these are the current period adjustments. These are called current period adjustments. So you need to perform the current period audit of current period adjustments. Clear? Any doubt? Okay. Now, let's go back to the question. There is one last thing that I want to discuss, which is like set out in the organized manner the main areas which you will focus on your audit procedures when auditing the consolidation, but including not limited to work you will perform on the management's consolidated workings and consolidated adjustments, how you will address intra-group balances and transactions across entities, how would you deal difference in accounting framework that we have already seen, how would you obtain audit evidence over amounting arising from investment in A Limited included in the consolidated financial statement. Now, what is A Limited? A Limited is it equity method. We have already discussed that also. So we have already discussed this. Now we need to talk about this part. How would you perform? And very important this, because it covers everything. If you do this thing, it covers everything. How would you perform, work on management consolidated working and consolidated adjustment, what you will do? If you have to audit the management's consolidated workings and adjustments, what you will do? This alone can be, 5 marks question.
We will look into the process adopted by the management to make the conversions.
Okay. Okay. What else? Quickly. What else you will look into? How you will audit? Consolidation. Simple. Harmonization, all these things. One thing. The areas that you will look into. I'm not talking about the area. I'm talking about the procedure. Again, I don't want to hear the areas that you will audit for the purpose of consolidation. No, I don't want to hear about that. I want to hear about the procedure that you will follow, the work you would perform.
Sir, for first, I will check whether the management has considered all the component included in the CFS or not. So, example,
Okay.
I will compare the existing year and current year, and whether they included everything in the CFS. So, say example, if anything is there, what is the new agreement? What are the new investment? We will look into that. Any subsidiary recently invested, any associate joint venture like that is there, we go to check. And minutes of the meeting also, we will see through it.
Okay. What else?
And also we will get the management representation that they included all the component in the CFS.
Okay. Anything else you will look into?
Then the harmonization of accounting policy, auditing gap, accounting
Those are
gap.
areas. Those are areas.
Yeah.
I don't want to, I'm not talking about the areas. How you will, do the consolidation audit, what work you will perform. Area wise, I'm not talking about. I want procedure.
Yeah, and also we'll see the what currency, the consolidation currency, other currency, what is the reporting currency. That currency conversion also we'll look into it. Then the unrealized profit, upstream, downstream, all this.
No.
We will look into the agreements entered into by the management with the shareholders.
I'm talking about basically, I'm not talking about the areas that, the test you will perform. No. How you will look into the agreements, how you will do the harmonization of testing harmonization, testing adjustment, how you will test the adjustments. The areas that you are listing, how will you do that? That is a question.
We will look into the minutes of the board meetings.
But how? That's the main question. That again is the area I'm talking about. The answer is pretty simple, straightforward. How do you perform the audit? I'm asking the steps of the audit. That's it. The steps of the audit is that first of all, you will understand the entity.
Understand the OPR.
Understand its controls. Which are there the controls around your consolidation? What are the policies on the consolidation? What is the group structure? You will understand the entity. Its IT controls, IT applications. If there is any IT system being used in the consolidation, harmonization on all those things will come way later. Once you need to first understand the entity. you need first you will understand the entity, its IT environment, its policies, okay, its group-wide controls on the consolidation. Then, on the basis of that, you will determine the nature, timing, and extent of the audit procedure required in each of the every area. Not necessary that I need to perform harmonization if there is no foreign company. But if there is foreign company, then I need to perform harmonization. But to what extent? It will be based on the testing of controls, understanding of risk or material misstatement in the consolidation process. If the risk is lower, I may need to go for a lower testing. If the risk is high, then I need to consider some more procedures. I cannot just do the adjustment testing. Like I need some more evidence. So determine the nature, timing, and extent of the audit procedures and assess the risk of material misstatement in your consolidation process. Then you determine how much you need to use the work of another auditor and how much you need to perform by your own self. As a parent, you should decide how much you can rely upon the work of another auditor and how much you can or you have to perform. See, the audit is being done by another entity. Perfectly fine. Not an issue. In this particular case, if I talk about, okay, FBV is a foreign entity. Perfectly fine. But what if the FBV has issued a limited review report instead of audit report? Need to determine, can I use their audit report? Is that auditor independent? Or whether there was an auditor or independent reviewer. Like in different jurisdictions, the audit requirement, review requirement change a lot. So how much to use the work of another auditor? Competency, capability. Remember, in SA 600, we have discussed that. You need to determine that. And then you will jump into each and every area for the testing that you were talking about. Harmonization, accounting policies, gap conversion, reviewing of minutes, completeness of components, all those things. But the basic structure should be this only. If you want to see the answer for this question, it's there on the page number 13.12. Basic structure, how you will do the audit. Okay. The auditor should plan his work to enable him conduct an effective audit in an efficient and timely manner. And the plan should include these things. Understanding the group structure, understanding the accounting policies, understanding the applications IT related to controls for the consolidation, group-wide controls, process of translation of foreign currency, what is the policy on that, okay, determining the nature, timing, extent of audit procedures, risk of material misstatement in consolidation process, determining the extent of use of other auditors' work in the audit, and then you need to coordinate the work to be performed, the performance. But this is planning. That first you have to do, then you go to execution, each and every area. Clear? So you need to understand what is asked, whether it is asked that in what areas or what are the specific areas where you will you need to look for the consolidation. No, it is not asked in that way. Okay, what is asked is work you would perform as an auditor. If you will write different areas of the audit, that is not appropriate. Clear? Any doubt with respect to this?
Clear, sir.
No doubts? Okay.
Sir, can you please show the question once?
Yeah. Yes, this is the question.
Okay, sir. Thank you.
Okay. If no further doubts, then let's do one thing. Let's take a quick 10-minute break. After the break, we'll gather back and continue with the second part of the discussion. Okay, let's take a quick 10-minute break. Yes. Back. So what we discussed till now was chapter number 13. Okay, that is the group audit. Any doubt with respect to any of the part that we have discussed already in the group audits? Any doubt? Okay. If no doubt, what we will now do is we will proceed to the next chapter that I want to discuss. And the next chapter is chapter number 16, which is your internal audit. Okay. Now, what I want to discuss in chapter number 16 basically is, and we will, again, take some questions on the same chapter, and we will understand how to solve questions if there is a question on chapter number 16. Okay. So, before I proceed with the chapter number 16, and before we start discussing on chapter number 16 of internal audit, can anyone tell me which section of the Companies Act requires internal audit? Like which section it is of the Companies Act that requires internal audit?
Section 138.
Okay, section 138. And whether section 138 mandates internal audit for everyone?
No, sir. There are certain listed company like unlisted company, public company, and private company. There are three categories are there.
Absolutely. There are few categories for which the particular internal audit is applicable. Okay. Now it is not applicable for all. And can anyone tell me which is the standard basically we talk about when we talk about the internal audit? Like, if we have to rely upon the work of internal auditor, which is that standard?
SA 610.
Yes.
SA 610, sir.
SA 610. Okay. Okay. Very good. Absolutely correct. SA 610 is the correct answer. SA 610 talks about using the work of internal auditors. Okay. And in that particular essay, we discuss, it's basically about how we can use the work of internal auditor being the statutory auditor. Okay. Now, as in statutory auditor, sometimes we are required to use the work of internal auditor. And that's where SA 610 comes into the place. Okay. So let me share the question. Okay. So it's a mixed question. We will see a lot of things in this. Rajiv and Associates have been the statutory auditor of Ish and Wish Limited, a listed company. CA Vishwas, the engagement partner, has designated certain substantive procedures on some selected assertions in response to the assessed risk of material misstatement for the year under audit. These assertions were not examined by him in previous years due to materiality or risk considerations. Mr. Yug leads the internal audit department of the company and reports to the company's audit committee. During the audit, a senior member of the engagement team decides to engage Mr. Yug to provide direct assistance in performing above substantive procedure. Comment with respect to the relevant standards on auditing. Also, indicate the activity to be performed by the statutory auditor prior using the internal auditor for providing direct assistance. So here we are basically first of all going into the area of SA 610. Okay. Now take a minute, read the question again, and then try to answer. What do you think about this? What should be, the auditor's responsibility over here?
So he should assess the internal auditor's independence and whether he can use the work of the internal audit department.
Okay.
Vis-a-vis the objectivity and the independence.
Okay.
And he should also assess the capabilities and the qualifications of the internal auditor.
Capabilities and qualification of the internal auditor. Yes, absolutely correct.
If he is not a chartered accountant.
Very good. What else?
Yes, sir. In addition to that, auditor should get the return communication permission from the management as well as the internal auditor to use. I'm going to use these areas from the internal auditor, and we need to get the permission from the management as well.
Okay, very good. Anything else?
But only one thing is that the auditor, he should not entrust the work where the matter is significant risk involved is there. Like normal provisions wherever is needed. Like say example, what is a significant matter is inventory verification, risk assessment, fraud risk factor, like that. Wherever the auditor involvement is there, then he should not use that. Like he can use for that sending the confirmation as per ACA 505, like that. The compilation of small items he can engage and vehicle use when there is no conflict with the management.
Where judgment is involved, he will not use internal audit over those areas.
Yes. Yes. Good.
And all confidentiality should be maintained, and what is how the work is that internal audit, how he done performed and procedure and everything. When there is a internal control assessment is going on very well, where only those item which is not complex in nature.
Okay. Okay. So yes, very good. All these points are there. So let's understand this particular in much more detail. Okay, by going through the standard itself. So we will see the standard which is there, SA 610, and we will understand with respect to what is the auditor's responsibility in this particular scenario, what auditor should do. Okay. Just a minute. Just opening up. Okay. So we will now look into the SA 600. Okay. So when I talk about SA 600 or 610, basically, okay, it divides into two areas. When we have to rely upon the work performed by the internal auditor. Second, when we actually need to obtain direct assistance. These are the both two separate scenarios. Okay, of using the work of internal auditor. So we have to answer the particular point in two separate ways. Okay. So what section says is in this particular scenario is that substantive procedures on some selected assertions in response to the assessed risk. These assertions were not examined by him in previous year due to materiality considerations. Now there is an internal audit department. During the audit, a senior member decides to engage Mr. Yuk to provide direct assistance. Now we have to think from a point of view of first direct assistance. Okay, SA 610 direct assistance. So when I talk about direct assistance, if I am using the work of internal auditor for the direct assistance, in that case, what is my role? What I need to do? So first of all, I need to determine with respect to whether I can use the work of internal auditor or not. Okay. Determining it which areas to what extent I can use the work of internal auditor. I can use the work of internal auditor with respect to, if they have performed something or as a direct assistant. But for that, I need to first see the role, like who is the internal auditor. Okay. Now, to what extent I can perform or I can use their work or internal audit function can be used. So for that, I need to understand, okay, internal auditors or internal audit functions, organizational structure, status, objectivity, policies and procedures. First of all, I need to look into that. What is the organizational status, objectivity, and policies of procedures of the internal audit function? Second, I need to look into the competency. I need to look into the whether they apply a systematic and disciplined approach or not. Okay, so these are the basic things. First, I need to understand with respect to the internal audit. Now, if I have determined that I want to go for the direct assistance, okay, if I determine that, okay, now I want to obtain the direct assistance from the internal audit, then in that case, what I need to do is, first of all, I need to determine that it is not prohibited by law. First of all, it should not be prohibited by law that I cannot use the internal auditor as a direct assistance. Okay. Second, is there any threat to objectivity and level of competency that we saw earlier also? Okay, over here, the organizational status, competence, objectivity, policy and procedures, competency, discipline approach. When you will verify, is there any threat to objectivity? Is there any issue with competency? Okay, because if there is a threat to objectivity, if there is an issue with level of competency, then you are not allowed to take the use, or you are not allowed to employ the internal auditor for even direct assistance. Okay, then you need to look into, you need to conduct the inquiry if they are interested in any way, if there is a relationship with the management which may cause a threat to their objectivity. Let's say, for example, the internal auditor is the son of managing director. For example, chief internal auditor, or the one who is providing you direct assistance, is relative of the managing director. So is there any relationship? Then if there is a threat, lack of sufficient competency, do not involve them. Now let's say if everything is fine, you want to involve them. Then understand, how much you need to involve into them, like you want to involve them in what areas, to what extent. Okay. If the area which involves a lot of judgment, if the area is having a higher risk of material misstatement, if there is a significance of threat to objectivity, okay, based on that, I will decide whether I should use the work of internal auditor in like direct assistance or not. For example, if there is a significant judgment, I will not use. If there is a higher risk of material misstatement, I will not use. If the area like where I want to use the internal auditor, over there the internal auditor is already working upon, or was his area only. For example, I want him to do some verification of internal audit reports. No, it will be an issue to the objectivity. Then internal auditor should not be reporting to the management. It should be reporting to us if they are, like we are taking the direct assistance. Okay, we should be making the decisions. The external auditor should be making the decisions with respect to the direct assistant. That means we need to provide him the guidance, and we should be the one who should be monitoring his work, not the management. But for that, we need to involve management in that. We need to take approval from the management that we will be involving the internal auditors, or we will be taking direct assistance from the internal auditor. Is it fine with you? Okay. So like management or those charged with governance will be informed, but they will not be reporting to them. Okay. Once you appropriately inform or communicate to those charged with governance and management, and you also provide them the plan, scope, and timing of the audit, then you can obtain the direct assistance from the internal auditor. Okay, so again, you need to obtain written agreement. You need to obtain written agreement on the objectivity, not to intervene. All these things will be there. You need to communicate to them timing, nature, and extent. All those things. So these are the responsibilities of the external auditor when it is they are required to use the internal audit function for the direct assistance. Clear? Any doubt? Any doubt till now? So this question was with respect to, you can say, SA 610. Any doubt till now? Any doubt? Okay. If no doubt, let us take one more question. It's an integrated case scenario. Okay. And we will take one of the questions, one of the MCQ from that integrated case scenario. Tom Limited is in the business of manufacturing and distributing of toys for the past 25 years. Since its inception, okay, the company is having its own in-house dedicated internal audit department. So company is having their own dedicated internal audit department, which has a team of competent and qualified chartered accountant, headed by the chief internal auditor, who, with the systematic and disciplined approach, monitors various internal controls laid at all levels of the functional areas. Messrs. Deva and Company, chartered accountants, have been newly appointed as the statutory auditor of the company for financial year 24-25. Messrs. Deva and Company want to use the work of internal audit function in respect of testing of operative effectiveness of the controls, in respect of substantive procedures involving limited judgment. Due to time constraint and extensive scope of statutory audit, Messrs. Deva and Company wants to take direct assistance of internal audit in the areas of physical verification of the fixed assets, inventory verification, goodwill impairment assessment, and accordingly, Messrs. Deva and Company are in the process of determining in which areas and to what extent internal auditors can be used, and in which areas statutory auditors shall not use internal auditors to provide direct assistance to perform procedures. Okay. So that was one of the scenario. Okay. Now we will take questions. First, we'll see the questions on that. Now, what is the question? Question is, Messrs. Deva and Company, assign the following procedures to the internal auditor for direct assistance. One, that relate to the higher risk areas of material statement, where the judgment requiring in performing and relevant audit procedures or evaluating audit evidence gathered is more than limited. That the work relate to the work with which the internal auditors have been involved and in which will not be reported to management and those charged with governance by the internal audit function. Third, that relate to the decision that the statutory auditor makes in accordance with the SA. Now, from the above, identify the appropriate procedure that can be assigned to internal auditors. Now, based on the case scenario that we discussed, identify the areas where or the procedures which can be assigned to internal auditors. Quickly, would you like to see the case scenario again?
So there is no D.
There is
No D.
no. There is D. Sorry, yeah. It's if it is getting yeah. There is D.
Answer is B, sir. B. Only second.
Okay, B. Anyone else?
B, sir. B, sir.
Okay.
So of course, in respect of these answers, only B can be there, but B is also slightly doubtful, sir.
Why doubtful?
Because he is involved with that work. So there is one clause which says that if he has performed a work we were discussing, and he will not be required to give assistance in that work which he has already performed.
So it was relate to the work with which the internal auditors have been involved and which has already been or will be reported to the management and those charged with the governance by the internal audit function. This area you are saying?
Yes, sir.
Okay. See, first of all, related to the higher risk areas, I cannot. Related to the decision that external auditor makes in accordance with the SA, I cannot. Related to the work with which internal auditors have been involved, means the thing in which he was already involved, I am asking him to test that for me again. That should not be the case. But in our question, let me go back to the question. What is the question that relates to which the internal auditors have been involved and which will not be reported to management or those charged with governance? Not to be reported.
Yes, sir. In this case, only two only is option.
Sir, if he is checking the work with which he has performed, Is that correct? I mean, we are using him for that work which he has performed. Is it right to get that work checked by him or assistance in that work? I don't think so. So that is quite correct. Of course, in respect of options, only B is the option, but I don't think so that this can be the.
Again, I need to evaluate the threat to objectivity in this particular scenario. So what is the threat to objectivity with respect to this one? Let's say, for example, if I'm talking about areas with which internal auditors have been involved and which have already been or will be reported to management by internal audit function, why this point has been brought into the purview over here? The reason, because the point this has been brought into the purview is they have already done the work, and that work will be reported to the management, means that that work is material. Okay, if something is reported to the management, this means this is material work, okay, or important work, or you can say significant. Now, if I ask him that, okay, you do the testing on the significant area that you have done earlier and which will be reported to management, that will create higher threat to objectivity. Okay, this will create higher threat to objectivity, and in that case, I should not be, having internal auditor to perform that particular task. That is the scenario. Now, let me go back to the question. Now, when I see this area, it relates to the work of the internal auditors, okay, they have been involved, which will not be reported to management. That means it's not material, not significant. And if it is not a material, not significant, that means there might not be any threat, or the threat will be of lower level. So safeguards can be applied. If you see in the code of ethics also, if there's a threat to fundamental principles, we talk about applying safeguards. Okay, we talk about that, okay, appropriate safeguards should be applied to mitigate the threat to an acceptable level. If there is a lower level threat, I can bring the safeguards. I can make it to the acceptable level. Simple example: if the internal auditor team has been involved, not everyone will be involved. Some will be involved, some will not be involved. So in that case, the one who is not involved, I will ask him to perform that work. But still, I can ask him. Are you getting the point?
Yes, sir. Perfect.
So that's why I can do this, not the first and third. Clear? Any doubt?
Clear, sir.
Okay. Now we will take one more question. Okay. Very good question with respect to company set. Straightforward question, not difficult, but we will understand the provisions over here. The question is simple. Explain the applicability of the provisions related to the internal audit under section 138 of the Companies Act and Rule 13. Also state when an existing company on crossing the prescribed threshold is required to comply with these provisions. So straightforward, we are required to talk about the applicability of the section 138.
Yes, sir.
So
For
what are
listed
the first of all?
the first category is listed company is applicable, sir.
Okay.
Second, unlisted public company, wherein there are four conditions. If any one of the condition is satisfied, then the internal audit is mandatory on that case. Point number one is a deposit, accepting deposit 25 crore or more and paid up capital at 50 crore or more during the previous year, outstanding loans and borrowings 100 crores or more uh, during the previous year, or turnover is 200 crore or more during the previous year. If any one of the condition is satisfied, then the internal audit is mandatory. And the third category is for private limited company, only two items. Turnover is 200 and the outstanding loans and borrowing is 100 crores.
Okay. Very good. Now, what I will do is, I will show you a case scenario. Okay. The same things that we discussed now will apply in the case scenario, basically. Okay. So, we have certain companies in our case scenario. Now, these companies, basically, we will see what are the details given and how and what is applicable to them. Okay. As on 31st March 2026, we have companies. XYZ Group operates to following three Indian companies. Alpha Manufacturing Limited, unlisted public company engaged in manufacturing for FY 25-26, preceding financial year FY 26-27. Okay, and its figures were paid up share capital, turnover, outstanding loans, and no public deposits. So, for the preceding financial year to 26-27, the FY 25-26 numbers are this. Okay. Now, second is Beta Limited, Retail Private Limited, a private company operating retail outlets for FY 26-27, 25-26. Again, it's a previous year to 26-27. The figures are paid up share capital, turnover, outstanding loan from bank and public financial institution 120 crores at peak during the year. Gamma Tech, paid up share capital 30, turnover 160, outstanding loans 40, total public deposit 10 crores. Now, the board has taken the following positions for the FY 26-27. Okay, what are the positions? First, for the Alpha. Management believes internal audit is not mandatory because the paid up share capital is below 50 crores and loans have never exceeded 100 crores. Hence, they propose to defer any decision on the internal audit for 2 years. Let's go to the Alpha, read the question, and then tell me what do you think.
No, the management decision is incorrect. The turnover is 200 crore or more is there. A turnover criteria is applicable.
Turnover criteria is applicable. What else?
For others,
Anyone else?
Even though this other condition is not applicable, any one of the condition is met, then internal audit is mandatory.
So, what are the 4 conditions which are there for the unlisted public company?
Sir, paid up capital 50 crore or more during the previous year, turnover 200 crore or more at any time, during the previous year, loan outstanding borrowing is 100 crore or more during any time previous year, deposit, accepting deposit 25 crore or more at any point in time during the previous year.
Absolutely correct. So, when I talk about public unlisted, so unlisted has 4 conditions: paid up share capital, turnover, okay, then outstanding loans and deposits. So when I talk about paid up share capital, it is 50 crores. When I talk about turnover, I'm talking about 200 crores. When I'm talking about loan, I'm talking about at any point in time during previous years, 100 crores. And when I'm talking about deposit, it should be 25 crores. Again, when I talk about deposit at any point. So these are 2 at any point. Okay. Now, in this scenario, if a public company satisfies any condition out of this, internal audit is applicable. So if a turnover exceeds 200 crores, which is the case, internal audit is applicable. Clear for the unlisted?
Yes, sir.
Okay. Now let's go to the Beta Limited. What do you think about the Beta Limited or Beta Retail Private Limited?
Yes, sir. In this case, also internal audit is compulsory.
And what are the conditions for the private limited?
Sir, we will look at only two conditions: turnover and outstanding of loan.
Turnover and outstanding of loan. Okay.
This
Either
person outstanding.
anyone, not and. Sorry, only or. Or condition is there.
Okay. Very good. Anyone else would like to add to this?
Since the outstanding loan is more than 100 crore, hence is applicable.
Okay. So basically, for the private limited, every private limited, now we have only two conditions: turnover 200 crores, outstanding loan from banks and public institution 100 crores. Turnover 200, outstanding loan from any bank or any public institution 100 crores. Okay. Now coming to the next part, gamma. What about gamma?
Yes, sir, it is listed companies.
Very good. So irrespective of this, every listed, irrespective of its requirement, every listed, irrespective of the numbers and everything, a listed company is required to have internal audit function. Okay. Now, the question we have for the limited, very good question. The management agrees in principle that the internal audit will be implemented, but wishes to appoint an internal auditor from FY 27-28, stating that there is no time-bound requirement for the immediate compliance once the thresholds are crossed.
Sir, here there
For
is no
gamma
threshold.
limited,
Since it is a listed company, once it's become the listed company, it is automatically applicable from the next financial year itself. There is no need to wait for another time bound.
Okay. So immediately. Once they cross immediately, correct?
Yes, sir. From the financial year 2026-27, it is applicable.
Okay.
Sir,
And
within 6 months time?
no need to check that the threshold.
So someone was saying 6 months. Like you were saying 6 months, correct? I think Geeta, you were saying 6 months, correct?
Yeah, sir. Yes, sir.
Yeah. Actually, the requirement and the provision is 6 months. If an existing company covered by any of the criteria, okay, then that rule, like if it is already there, like they have to apply from the 6 months. Now that is a transitional provision. So the 6 months was a transitional provision, means that if they are already covered, and when this section came into the place, they have 6 months. But that is a transitional. Now we are not talking about the transitional, because when the Companies Act 2013 was implemented, at that point in time the transitional was there. Now after application, after doing all those things, after this, once the company, every listed company, once the company becomes listed, they have to apply. So the 6 months in this scenario will not be applicable, because that is only for the transition when the act was implemented.
Okay, thank you, sir.
It is immediate.
Here the immediate means with effect from financial year 26-27. Since the only or when it's become the listed company.
See, for unlisted, for private limited, you are checking previous year numbers because there are numbers involved. In case of listed, there is no number involved. So when I say every listed company, by default it is applicable the moment it becomes listed. But any which ways, when you go to SEBI ICDR, okay, over there you have a different provisions with respect to the internal audit. Before getting listing or all those things, you have to go for the internal audit and have those corporate governance things. That's a separate topic. Any which ways you will appoint that over there. But the moment you become listed, Companies Act is applicable. Rule 13, Section 138 have internal audit function. Clear?
Okay, sir.
Yes, sir.
Perfect.
For others, there is timeline, sir. So
Others, why there is a timeline? Reason because they are number based.
but at any point of time, it cross the limits. Then they have to mandatorily point.
So, see, for example, in the current year, if the turnover, I can come to know about the turnover at the end of financial year. Okay. If the turnover exceeds, and why preceding financial year? If you see the provisions of Rule 13, it says preceding financial year. That means I have to look back. It's not something of the current financial year.
So clear, sir.
Any doubt? Any doubt? No? Okay, if no doubts, let us go back and discuss something more in this scenario. We have some more information, and I have this particular case study. Further assume that during FY 26-27, Alpha Manufacturing Limited outstanding loan balance temporarily exceed 100 crores for 1 month due to short-term working capital facility. You are appointed as a statutory auditor for all these things we have already seen. Now, for the 3 companies, analyze whether the provision relating to internal audit are applicable for FY 26-27. You have now just state by when each company once covered is required to comply with the requirement. We have also discussed this one also. This is also done. So yeah, this one, only this point is remaining that we need to discuss. Further assume that during FY 26-27, Alpha Manufacturing's outstanding loan balance temporarily exceed 100 crores for 1 month due to short-term working capital facility. Do you think it will make any change or it will make any difference? Now let me go to the Alpha Manufacturing again back. Do you think it will make any difference in this scenario?
Sir, what is the loan outstanding as per the new question?
Loan outstanding 100 crores.
Okay. Then also it is applicable, sir. Because at any point in time during the previous year, even first day loan is taken, availed, and outstanding is 100 crore or more, it is applicable.
Also, turnover limit is also exceeds, sir.
Yeah, also turnover is also there.
Yes, absolutely correct. See, what is the scenario in our question basically is that they are already exceeding turnover. Okay, if they are already exceeding turnover, that means in this particular scenario, the internal audit function is already applicable. It's not something that now they that they need to apply for only 1 year. It's not the case. Internal audit function is already applicable to them. So, irrespective of the loan related thing, they have to appoint internal audit function. Okay. They have to have the internal audit function. It does not make any difference if their loan exceed 100 crores. Clear? Any doubt? Simple. It was pretty simple because any which ways it was getting triggered. The turnover criteria was getting triggered. So it doesn't make any sense to have like 100 crore. Irrespective of that, it will be applicable.
So it is not a cumulative condition, it is an independent condition.
Yes. Okay. Now, when I talk about basically the term preceding financial year and the term current financial year, that's where I need to discuss about that. Now, when I talk about the outstanding loans and outstanding deposit, do you think it is current financial year or preceding financial year? What do you think? The provision talks about loan and deposits, current financial year or preceding financial year?
At any point of time during the preceding financial year.
Yeah.
Yeah. Okay. So at any point in time during the preceding financial year, turnover paid up share capital was already preceding. This is also preceding. Okay. So now in the question, when you have 100 crores, they have crossed in 26-27. That means in the next year also, for sure, that they have to have the internal audit function, even if it exceeds temporarily. So 26-27 will be the preceding financial year for 27-28. So now for the 27-28 also, they are fixed with the internal audit function. Okay. So not only 26-27, but 27-28 also now they have to have the internal audit function. They are satisfying the conditions which is there. So just wanted to highlight that one particular point over there. Fine. Any doubt? Any doubt?
No, sir. Thank you.
Okay. If no doubt, let me take up one more question. A good question on report drafting. We will see one question on the report draft in this particular scenario. It's a good and detailed question, I would say. Just a minute. That's just a minute. Yeah. Yeah. Okay. So the question is, M&P Industries is a large, diversified, unlisted public company with multiple manufacturing plants and centralized shared service centers for finance and accounts. For FY 25-26, the audit committee engages XYZ and company chartered accountants at internal audit for the specific assignment on the P2P process, at one of the major plant and at the SSC, that's a shared service center. During the internal audit, XYZ and company notes the following. At plant, control over three-way match are well designed and generally operative effectively with only few minor non-recurring deviations. At SSC, significant issues were observed. Delay of 30 to 45 days in posting in vendor invoices, multiple duplicate vendor codes, cases where payments are released without complete documentation and resulting in avoidable interest and penalty charges. Management requests that the above SSC issue be presented only in annexure labeled for internal use of process owners and insists that the main report going to the audit committee should focus on overall satisfactory control environment without detailed SSC finding or any management action plan. Okay. So then fieldwork is completed in April 26, but due to discussion with the process owners, draft report is shared with the audit in August 26. The next audit committee meeting where internal audit reports are to be reviewed is scheduled near early September 26. The engagement partner proposes to issue a very brief 2-page internal audit report to the audit committee, highlighting only effective controls at the plant and general positive conclusion. He does not intend to describe the detailed findings, include any summary of corrective actions, and state that the internal audit was conducted in accordance with the standards of internal auditing. Now, question number 1. What are the essential contents, key element that should be included in the internal audit report for this P2P assignments. Okay. Now, based on this particular detail, tell me what should be included in your internal audit report, the key elements that we need to include. What are the key elements that should be included in the internal audit report?
So definitely the addressee, the report of internal audit, addressee, date, and the scope, objective, and the what are the each and every area, what is the point identified, what is the action needed to be done, action taken if it is submitted in the next time. See, in the existing report, the earlier period report, if any item is still pending, those item also need to include the report. And in existing report, what are the action taken also? If an action is not taken, then action not taken report also we need to include.
Okay. Anyone else? What is required to be included? The key elements other than that.
And
if you like to add something more.
And finally, nature, UDIN.
Okay, UDIN.
FRN number.
Anything else?
Yes, sir. You have to give the summary of this critical findings is there, no? They have to give that also.
Okay,
And
critical findings, yes.
Fact that audit was conducted as per standards on internal audit.
Yes, absolutely correct. Absolutely correct.
Executive summary first. That's what they discussed by Keita also. Summary.
Yes. See, now let us see what is required to be included as a key elements. We are talking about, first of all, key elements. So the answer to this question is on page number 16.19 in your study material. Okay. So the following are the key elements that we are talking about in your internal audit report. An overview of the objective, scope, and approach of the audit assignments. Overview. Now, here in this particular scenario, when I talk about an overview, okay, that means I'm talking about the objective was to conduct the audit of P2P controls, scope P2P, and SSC, P2P controls at the plant, and SSC approach of the audit assignment, like how we, were conducting the audit. The fact that the internal audit has been conducted in accordance with the standards of internal audit, that was missing. An executive summary of the key observation covering all important aspects specific to the scope of assignment. All. You should not leave the SSC related findings. You need to cover that also. Okay. A summary of the corrective actions required for each observation, which was not there. Nature of assurance, if any, which can be derived from the observations. That was also not there. So in that case, you need to have these 5 key elements at a minimum in your audit report, internal audit report. Clear? Now, second was comment whether the proposed 2-page positive only report is appropriate. Okay. Now, we will see what is there in the positive only report and why it is not appropriate. Just a minute. Yeah. Okay. So, this is positive only report. Very brief, 2-page internal audit report, which is highlighting only effective controls at the plant and general positive conclusion. And this has all these things. No, sorry, it does not have these things. So these items are missing. Now tell me, based on what we discussed now, what is the issue with this 2-pager report? What is the issue with this 2-pager report? Quickly.
It's not covering all the aspects.
covering not all that set. So we discussed the 5 key elements. Can you map in front of these 5 key elements and tell me what is missing over here?
These corrective actions are not there. Describe details of findings are not there.
So first of all, overview and objective scope of audit.
Yeah, that is not there.
That is not there. Second, fact that the internal audit was conducted as per standards on internal audit. That is also not there.
That is there. No, state that internal audit was conducted.
He does not. No. He does not intend to. These items are already missing.
Oh, okay, fine. He does not intend to. Okay.
So these items are already missing.
I think nothing is there in the report then.
Yes. So third one is the executive summary of the key observations covering all important aspects and the scope of engagement. So specific to the scope of engagement. Yes.
Summary of corrective actions and finally assurance.
Yes. So he is only highlighting effective control at the plant and general positive conclusions. But we have also identified, or internal audit has also identified, the issues at the SSE, which is not there. So you are not including all the summary of corrective actions or findings, basically. A summary of the corrective actions also is being not included. And the nature of assurance, if there is any assurance involved in this, then that is also required to be included, which is also not there.
That too, he provided only positive conclusion. Whenever there is a negative, that also he not included.
Correct. Any doubt till now?
But so practical purpose, now sometimes we can see for as a corporate deck, only selective things they're presenting, like for meetings for audit committee, they will give the key highlights, not go through detail, like they have selective time.
See, okay, we will come on to that point. There is one follow-up on that one. So, there is one question where we will discuss this point. So, as of now, park it for further discussion, I would say.
Okay, thank you.
Any doubt till now? No? Okay. Now, let us take point number C first of all. First, we will take point number C. Comment on the timing and the process of issuing the draft and final internal audit report, in this case, in the light of SAI 370. Or even not 370. If you have to tell me, like, what is the procedure of issuing draft and final internal audit? If you need to write on that. So, in this particular question, what was the scenario? That fieldwork is completed in April, but due to discussions and with the process owner, and the draft report is shared with the audit in August 2026. The next audit committee meeting where internal audit reports are to be reviewed is scheduled early September 2026. Now, tell me how reporting of internal audit issues is there, like how the report is issued.
Sir, internal audit report should be issued on a timely basis. It should not be prolonged wait for next audit report release. In this case, actually, that audit is completed April 26, but they are only about to issue in August. It's such a long time. The next committee meeting is the internal audit purpose to be reviewed also September. I think on quarterly basis by end of the month I think they are doing the audit on quarterly basis. I am assuming this.
Okay.
Which means quarterly sense, for example, Jan, February, March, they are completed their work by April. 1 month they are taking time, I mean.
Okay.
They should release the report on the reasonable time. Here that the reasonable timing is missing on this.
Okay, let me tell you. See, it has the answer to this particular question is there on your page number 16.18. Straightforward. Okay. Let us come on the page number 16.18, where we are talking about reporting of the internal audit issues. Now, when we talk about internal audit issues, there are two stages. One is a draft stage, one is a final stage. This is about draft. So first you must prepare a draft report of internal audit, okay, which should, has the business process, function reviewed as per the scope, all these things that we discussed. A draft report. Audit period covered during the audit, summary along with the detail issues, okay, gaps noted, implication on the business, and the recommendation to identify the gaps. Now, once you have this draft report, okay, you issue that draft report, and then you go to the management and ask the management about the management action plan. You agree that along with the responsibility of the action plan and the timelines for their actions, by when you will take these actions. Now, once you agree with the action plan, once you issue the draft report, then thereafter you circulate the final report and present your findings to the audit committee. Okay. So first draft, then management action plan, then final. This is how you need to follow the procedure for issuing the internal audit report. And there are two stages with respect to the reporting results of the internal audit. At the end of each particular audit assignment, you need to issue an internal audit report covering a specific areas, function, or part of the entity, like whatever you have done, which is prepared by the internal auditor, where you need to highlight key observations arising from those assignments. Okay. Now, this report is prepared in a manner that we have seen the key elements and everything. So you need to follow the key elements, you need to prepare the reports, and you need to issue at the end of each particular assignment. Now, the particular assignment in our case was P2P. This report is then issued to the auditee with a copy shared with the local and executive management as agreed during the planning phase. Now, coming to the periodic basis. On the close of the plan period, generally before audit committee meetings, that's the general one. Okay. Now, a comprehensive report of all the internal audit activities covering the entity, the plan period is prepared by the chief internal auditor. This is normally done on the quarterly basis. Remember, September quarter, the internal audit team was, audit committee was about to meet. At that point in time, you prepare a summary, comprehensive report of all the internal audit activities. Okay. Then you present to the highest governing authority. Highest governing authority in this case was audit committee. Okay. So quarterly report shared with the audit committee. So this is how you need to follow internal audit report issuance procedure. Now, in this case, if you see, fieldwork was completed in April 26, but due to the discussion with the process owner, draft is shared by the August 26. Fine. Draft is shared. Now obtain MAP, like management action plan, and then issue the final report. In September 26, if there is a scheduled meeting, then prepare a comprehensive report for the entire quarter, okay, whatever the internal audit activities are, and then present that in front of the audit committee, the quarterly report, periodic review report. So that in this two way, you will present your report to the audit committee and for at the end of each assignment.
Sir, this is fine, but my inner thought is that for every stage, draft stage and action taken stage and review the final report and everything, the timeline should be agreed on the planning initial stage itself. So example, in this case, the April to September, it's about 5 months. For the one quarter review, it's taking 5 months means, what about the other period coverage?
No,
Then,
see, in
then,
question, we don't have anything about the June quarter. Okay.
okay.
We will assume a report will be issued. So I cannot, like in this particular scenario, comment on the things which are not there. We have to assume those things are in place.
Okay, okay, that is perfect. But I could not see the connectivity in that question. Actually, the clearly they are not coming
That's
up.
why we have to assume. Sometimes see that sometimes like if they have to include everything in the question, it will be very big. So if something is not given, if it is not contrary, see anything contrary to the your given scenario will be explicitly provided in your question. If the thing is not explicitly provided in your question, that means you have to assume that is either present or that is not a contrary scenario.
Yes, sir. Perfect. Thank you, sir.
Basically, I want to top up here. In practical scenario, we are seeing there is delay and corrective action they are taking during this period, like April to August. Every month, what our observation there, they will take some action so that it should not repeat.
Yes, that is practically this follow up is done because in the June quarter, already all the financial audits and everything is going on. A lot of activity is going on. Okay, your quarterly reporting is going on. Your annual reporting is going on. A lot of things goes on. So basically, September quarter is the one when you see the action again back. But yeah, that's another story. Any doubt? Any doubt? Till now, with respect to the reporting part.
No, sir, not from my side.
Okay. Now, one more area that I want to discuss about, okay, is with respect to the content and format of internal audit report. See, we discussed about the key elements, but we have not discussed about the content and format of the internal audit report. Can anyone tell me, is there any defined content and format of an internal audit report?
No, sir, there is no defined format, but some items to be included in the report, like objective, scope, executive summary, and the fact finding, and then what are the deficiency, action taken, like that. These are the minimum coverage.
Okay. Yes, see, there is no format or content defined. Okay, there are few elements which are there that are required to be included. Key elements that we have seen. If you bifurcate the key elements, you will get the content and format. For example, scope, objective, period covered, executive summary, summary of critical findings, detailed audit findings, ratings of highlighted issues, audit recommendations, response received from the management and their action plan. So whatever we have discussed, if you bifurcate that, you will get the content and format of the internal audit report. But as such, there is no content and format prescribed as of now. Okay. Now, we will discuss one more point in connection to this one. One more question that I will add. Okay. So, after completion of P2P audit, management of the company, okay, management of the company denied to provide any further information to internal auditors regarding rectification of issues identified in internal audit, okay, as they contended that now once the audit is now they contended that once the internal audit is closed or completed, then the auditor is not required to focus again on that issues or on those issues. Okay. So they contended that once the internal audit is closed, then the internal auditors are not required to focus again on those issues. Comment in light of internal auditors' responsibility on rectification of issues identified in internal audit. So you need to comment with respect to the internal auditor's responsibility on the rectification of issues identified in the internal audit. So what are the
Sir, I think the P2P audit is a one-time audit done by the internal auditor, right? It's not the continuous audit.
Okay.
But P2P audit is the purchase to pay or procure to pay, sir?
Purchase to pay, procure to pay or purchase to pay.
Okay, fine. Then if it is a specific assignment is given to the particular person, the internal auditor, then he will prepare the report, he will discuss and he will issue the report to the management. His responsibility ends with there.
Wait. In that case, that's why I have mentioned the internal audit. I have not mentioned the charter accountants or anything. Assume that the internal auditors are permanent auditors. Although it's a specific assignment, I'm talking about permanent internal auditors of the company, or the internal auditors appointed under the Companies Act, kind of that.
Sir, in this case, definitely he has to discuss with the management why that action is not taken. Those charges will govern as well. Then the limitation scope is limited to the particular item. Management, if not ready to accept and correct the matter, then he can very well discuss with the charge with concerned management. If still they are not rectifying it, then he can try to withdraw from engagement. If there is no disconnect on the law, any other laws. If there is a law prohibition, if the law is prohibited on the internal audit matter, then in case of listed company, there is a prohibition is there. Within 45 days, the end of the first quarter, then he has to do the second quarter report, this report, like that is the provisions are there. Then if it's a third quarter, the withdrawal is not permitted, then he has to complete the third quarter as the fourth quarter. Also, he will give the full complete report also.
Okay.
So basically, management action plan has to be agreed, responsibility timelines, and he has to showcase what are the improvements versus previous audit, current audit. This is his responsibility.
Okay, yes. Yes, tell me. Anything else? Anyone else?
Because each observation having own timelines according to gravity of issue. So accordingly, he has to follow and he has to present they are going right way or not. We are taking action.
See, basically, what is being asked over here is internal auditor's responsibility on rectification of issues identified in the internal audit. What do you need to comment on that in this particular question. And what that means is that you are required to comment as per SIA 390, if I'm not wrong, it is SIA 390. That is monitoring and reporting. Okay, of prior audit issues. Now, what is the responsibility of the internal auditor with respect to the prior audit issues? He has to follow up closely, continuously for monitoring the closure of the prior audit issues. Like when we, as you said, like the management agrees on the action plan, we need to follow up on that action plan. Okay, whether you have implemented the action plan or not, that should be done with the formal monitoring process, which is pre-agreed with the management and those shared with governance. The responsibility to action plan remains with the management, but the responsibility to monitor continuously is with the Chief Internal Auditor. So Chief Internal Auditor is responsible for continuously monitoring the closure of prior audit issues through timely implementation of the action plan, but the responsibility to implement the action plan is of the management. Now, how this monitoring is done is in the form of action taken report. Okay, if you come at the page number 16.21 of your study material, you will find this follow-up, which we are talking about, that is SIA 390 monitoring and reporting of prior audit issues. As I said, Chief Internal Auditor is responsible for continuous monitoring, but the responsibility to implement the action plan remains with the management. Now, this is formal monitoring I was talking about, okay, where you do monitoring as per the agreed plan with the management. It is pre-agreed with the management. Now, this monitoring is done based on the action taken report of the previous audit. You prepare this report, action taken report, ATR, and you present it to those charged with governance. See, this is the action taken till now on all the issues that are identified in the previous audit reports. Okay, so again, monitoring and reporting use means like periodic tracking of issues raised during prior audits and evaluation of the corrective actions undertaken by the company to resolve them and to report any option open and pending matters to the audit committee. Okay, now you have to do the follow-up. Okay, you have to review that. Okay, what action has been taken? If no action has been taken in a reasonable time, draw the attention of the management or draw the attention of the management and those charged with governance also. Reach out to those charged with governance that no action has been taken. Okay, where management has not acted upon on his suggestions. Sometimes management will say that, okay, no, we will rectify, we will change the process. But after some time, you will see they have done something else. They have not acted upon his suggestions. They have not implemented that what they recommended or what was agreed. They have done something else. So you need to ask why you did something else. We agreed on X thing. Now you did the Y thing. Why? What is the reason for that? So ascertain the reason for that. Okay. And then you need to see periodically, you need to review the extent of the implementation. Sometimes the action plans are of, longer duration, that within 1 year we will change this. So you need to see that periodically, that what is the extent of the implementation. Do you think that during 1 year, like after 6 months, evaluate that after 6 months, that within the remaining 6 months, 6 months are already gone. Now 6 months are remaining out of 1 year. That within the remaining 6 months, whether this plan will be implemented, whether the issue will get resolved, and accordingly highlight the recommendations, okay, which have not been fully implemented or partly implemented or further actions required. So this is something, an internal auditor is required to do with respect to the follow-up rectification of issues of the prior audit. Clear? Any doubt? Any doubt till now?
Yes, sir. Clear.
No, sir. Thank you.
Clear, sir.
Okay. See, we discussed various things in the internal audit and the group audit today. Okay. Now, what I expect from you? I expect that you solve the questions on these topics. When I say solve the questions, I mean to say that you write the answer, okay, in detailed way, the way you write in exam on these topics, so that you should have a writing practice. Now, why writing practice is necessary? Because writing the answer. See, right now you say me some points on the answer. Okay, but when you will write those things, you cannot write in short, like just few words. Answer has to be of appropriate length. It should contain appropriate points. Now, speaking an answer is different than the writing an answer. And writing is not something you will get from day one. You have to understand that, writing requires a practice. Writing in a qualitative way, like, your answer is of that quality, that the reader should understand what you want to write, what you actually intend to say is required some practice. So For that, I would suggest please start writing practice if you have not. Or if you are practicing, then it's really good. You continue that. Okay. But if you have not started writing practice, please start writing the questions. Go for the MTP that the BOS are already given to you. The institute has already given to you MTP papers and the answer set. Take that MTP test. Okay, write the answers and then compare it with the answer set which is there. Solve the questions which are already there in the RTP. Solve the questions which are there at the end of each chapter. And by that way, you will have a very good writing practice. And then also compare your answer with the answer which are given. Okay, in order to see where you need improvement. Okay, so please have the writing practice. Most of the marks students lose in the audit subject is because they don't have the writing practice. You know the answer, but you don't know how to write the answer. That's where you lose the marks. Okay, so please have the writing practice for the questions. That is very important. Reading the topic, understanding is one thing. Having writing practice is another thing. Any doubt on any of the things that we have discussed till now?
Sir, in theory, stepwise marking is a bit challenging, na, in compared to practical questions in other subject.
See, again, it's not challenging, I would say. See, when we see an answer, it's not necessary that, you need to write this point first, you need to write this point second, unless it's a procedure. Let's say, for example, if we are writing on the audit procedure, yes, we have to write first about the planning. But if you have to write key elements of a particular item, key elements of the audit report, key elements of something else, the order may change. Okay, because at that point in time, order is not relevant. What is relevant? The things that you are required to include in as a key element. So that should not change. So here I would say stepwise marking it would not be a problem till that time. It's a procedure that you need to write.
Okay.
Any other doubt? Any doubt till now? Whatever we have discussed. See, ask as much doubts as you can, because this is a facility. This is a platform that is provided to you to learn and solve your doubts. Take benefit of it.
So, can you give me information about this edit trail or edit log something?
Okay. What information, like any specific example you are looking or the provision you are
No,
looking?
what is it? Provision of it, sir. What is it? I don't know.
Okay. So the provision goes to the section 143, okay, of the Companies Act. Now, and again, a responsibility on the management also with respect to the financial statements. See, if I'm not wrong, with respect to the audit log,
Yes, sir. We have 5 sections. We need to report it in 143. One, there is the audit trail and audit log, and what are the a system which we are using for the recording the transaction. We need to be report it in the audit report.
Yes. Now, see, there are two ways, like two things involved in this. There is section 120 books of accounts to be kept by the company. And there's a rule 3 of accounts rule, which talks about manners of books of account to be kept in electronic mode. I'll quickly show you also. Okay. Just a minute. Now, first comes on the company. Okay. The requirement comes first on the company. And this is the company set directly on the MCA website. That what they say is, from the financial year commencing after 1st April 23, every company which uses accounting software for maintaining books of account shall use such accounting software which has a feature of recording audit trail for each and every transaction and creating an edit log, not edit log of each change made in the books of account along with the date of such change were made and ensuring that the audit trail cannot be disabled. That is a requirement placed on the companies, the first step of the audit log. Okay, audit trail basically and the audit log. The second requirement goes to the auditors under section 143 of the Companies Act. Now, section 143, there is point J of 143.3, which is talks about, rule 11, other points that are required to be looked into by the auditor. And if I talk about other points, over there it says that whether the company in respect of financial year commenting on or after 1st April 2022 has used such accounting software, okay, which has a feature of recording audit trail edit log, and the same has been operated throughout the year for all the transactions, okay, and in the software, and the audit trail feature has not been tampered, and the audit trail has been preserved by the company as per the statutory record retention requirement. So first, company has to maintain under section 128. Second, auditor has to verify whether it is perfectly fine, it has not been tampered, and the records are preserved under section 143 3J, rule 11, point G. So that is how, both sides the requirements are placed, and auditors' responsibility comes that they have to verify during the audit and have to report in their audit report.
So means in all companies have to make an audit. All the auditors have to check this in the company.
All, there is no exemption. If a company is using a software, which every company does as of now, because in manual you cannot have an audit trail. If you are manually maintaining the books of account, it's a different story. But if you are using a software, all companies, there is no exemption to that.
Okay, sir. It is like a software which is placed in it. Okay.
Like any ERP software, you name it, like Tally, Zoho, Oracle, SAP, everything, every software.
And how we will rely on that software that it is right or wrong?
Understanding the entity and its IT environment. SA 315. So you have to understand what IT software has been used, whether the company has a way to edit the functionality, change management. A lot of things has been discussed in SA 315 when we talk about understanding the IT environment, IT general controls, change management, access management. Even in the chapter number 12, digital audit, when the softwares play a very important role, when they are complex, you perform digital audit.
Yes, sir. So we are reading everything and we are aware of a theoretical subject and we don't know about the softwares and all much more about that. Then as a CA, what we have to do so we know this?
See, till that now there are two aspects of the softwares and understanding this IT environment. One, see how we understand the IT environment is we do the walkthroughs, we perform the design effectiveness testing of these softwares, like how the management uses that software. Okay, so we understand the process that is there which management follows to operate the software. Now coming to the backend, like the code, hard code, servers and everything, the technical point. Auditor's expert, appoint an expert in the IT. He will work for you. He will provide you the details that you need. And accordingly, you can rely upon the work performed by an auditor's expert.
Yes, sir. Thank you, sir.
Any doubt? Any other doubt? Okay. If no further doubts, then thank you guys. Thank you for participating to this session. Okay. Please practice. Okay. And all the best for your exams. Thank you.
Sir, one last question. Stat audit and internal audit, both limit are different. Like 20 audit, for tax audit, there is 60 limit. And for stat audit, 20 limit. Internal audit, 20 limit. All three are separately now. Maximum one CA can do.
Like I lost you in between.
Basically, I want to understand, like one chartered accountant can do 60 tax audit.
Mm-hmm.
And, 20 internal audit, 20 company audit, stat audit. All three are separate now.
20 internal audit. Now, as far as I remember, the 20 internal audit limit, I need to check on the 20 internal audit limit, but tax audit limit is different. Yes, and the statutory audit limit is different. It is given in the chapter number 19, if I'm not wrong. It
Yes,
is
sir.
on the.
Yes, sir. It is there in the chapter number 19 only. Professional
Yeah.
ethics, that area.
Let me go back to that quickly. I'll show you.
Because I think internal audit, there should not be any limit, but I think there is some limit up to 20 audit we can do for internal audit.
No, that is the specified number of audit assignments. Okay, let me show you. Okay. So we are talking about this specified number of audit assignments. Okay. So audit assignment in case of Companies Act and now what is the specified number? The specified number of audit assignment in case of a chartered accountant, okay, a proprietary firm or firm of chartered accountant, 30 audit assignments in respect of private companies, okay, with exception of 1% company and government company. So that is an exception. Or in case of a firm, 30 audit assignments per partner.
This 30 include both internal audit and stat audit both.
No, again, that is the specified number of audit assignment with respect to the Companies Act.
Tax audit is different.
Tax audit is different. Yes, tax audit is different. This is specified number of audit assignment under section 141. So that's a statutory audit.
And for internal audit, there is no limit, correct?
No, internal audit, I said there is no limit. There is no.
I think in internal audit there is no limit is given, I believe. Any number of audit we can undertake, I believe.
But again, remember one thing. When we talk about internal audit, okay, even though there is no limit, you need to think of the code of ethics. Code of ethics is still applicable. If you perform any assurance function, okay, where you are not verified and signed on the report without verification, you may be held gross negligent. So you have to take audits, whether internal audit or any assurance engagement, okay, where you have the time bandwidth to perform that particular assignment. Otherwise, the relevant provisions of the code of ethics will also be available, applicable, and Chartered Accountants Act and their schedules will also be applicable.
Okay.
Clear?
Okay. Thank you. Thank you, sir.
Any other doubt? Okay. If no further doubts, then thank you guys. Thank you for participating in today's session. All the best for your exams. Thank you.
So thank you.
Thank you, sir. Thank you.
Thank you.
Thank you, sir. Good night.
Thank you. Good night. Yes.